Welcome back in to the Rocc Pod, presented by the Royal Oak, Michigan Chamber of Commerce. I am John Gay from Jag and Detroit Podcasts.
I am Lisa Bibby, your local neighborhood realtor with Keller Williams.
I am Andrea Arndt, an attorney at Dickinson Wright.
Trish Caruth from Your Personal Jeweler, our fourth member of our team, not able to be here today. We'll give you her contact information at the end of the show. Today's guest is Peter Boyse of Boyse CPA, and as we start to get into 2022 and we're thinking about all the numbers, this is going to be a really important conversation and I think very useful to our listeners, especially business owners. Peter, welcome to the show. Great to have you.
Yeah, thanks for having me. I'm excited to be here.
Well, yeah, thanks for being here, Peter. Before we talk about what business owners need to know about taxes, can you give us a little bit of background on yourself?
Certainly. So I jumped on board with my dad. He started the firm in 1980, and I grew up saying I was never going to be an accountant. I hated the long hours, hated tax season. Said, there's no way I'm ever going to become my dad. And then about a decade and a half ago, I was working a job that I hated and required me to travel all the time. And I said, okay, well, maybe it wouldn't be so bad if I was home all the time. And he and I had a conversation about getting started together. And I joined his firm in 2009 and discovered I really like the work. It's fascinating to me to kind of help business owners get where they want to go. That's what we're trying to do. We try to sit down with business owners, figure out what it is that needs solving, and use our talent and resources to help them get there.
I'm a little biased, but I think 1980 was a great year. That's just, for...
Gee, what are you hinting at?
Peter, here we are, January, beginning of 2022. We're going to get into some specifics as we go throughout the episode, but generally speaking, what are some of the key things for business owners to think about now at the start of the year?
All right, start of the year, everybody starts fresh, right? Everybody kind of has a good outlook. One of the things that a lot of people don't do, and this isn't really from a tax perspective, but really ought to be done, is start to set some goals, right? And that taxes are going to relate to that tangentially, right? Mm-hmm. Because if you're setting goals for revenue or you're setting your budget for the year and you want to manage your expenses in a way that's efficient, taxes are going to be a part of that, right? So you can't avoid it. So I'd say at the start of the year, you need to have just a plan in place for the year. And part of that means trying to figure out what your tax liability is going to be as soon as possible. That may be difficult to do at the beginning of the year, but the earlier you have that conversation or start having that thought process, the better off you are.
It's just like doing a podcast, prep, so that once you start the show, all you've got to do is go through it. And I'd imagine these resolutions carry a lot more weight than I'm going to go to the gym all year and lose 30 pounds. This is your business. This is your livelihood, right?
Right, yeah. If you think about it that way, the goals you set for 2022, they really have far-reaching effects into 2023 and beyond, right? Those goals that you have for the current year need to work in concert with the goals you have for the next 5 years, the next 10 years, whatever they may be.
Well, thanks, Peter. And I know the last couple of years here have been quite difficult for a lot of business owners, but it looks like we're getting some payroll tax credits that are going to be available to employers. Can you go into detail a little bit more about that?
Yeah, Lisa, that's a great question. So one of the things that we've been doing a lot of recently is looking at something called the Employee Retention Tax Credit. Now, as of this recording, it's possible that that tax credit no longer exists. The House bill that was just passed indicated that the Employee Retention Tax Credit was going away as of October 1st, 2021, but that doesn't mean it's not still available, and a lot of business owners don't know about it yet. So the first thing you need to do is make sure that you qualify for the credit. And there's different ways to qualify based on whether you were in existence in 2019 or not. Let's start with a business that's been around for a while, because that's the easiest one to explain. What you have to do is you have to compare your revenue for one quarter in, let's say, 2020, and compare it to the same quarter in 2019. Now, if you have a 50% drop in revenue for that quarter over quarter, you automatically qualify for the credit. And it's even easier to qualify for the credit in 2021. If we were to look at a quarter's revenue in 2021 and you had a 20% drop, then you qualify for the credit in that quarter. And now the credit is based on the wages you pay your employees. Okay. In 2021, it's much more lucrative. The credit is capped out at 70% of an individual's wages up to $10,000 per quarter. So for an employer that maybe has 3 employees, all making at least $10,000 a quarter, that is a tax credit that could be equal to $21,000 in one financial quarter. So we're looking at very lucrative opportunities for employers to get money back from the IRS.
That is really good to know. And I hope many business owners appreciate it and are able to take advantage of this.
It's really, really helpful. The hardest part is making sure that you qualify. So you got to kind of walk through that eligibility process to make sure that you qualify. And if you don't qualify in one quarter, it doesn't mean you can't qualify in another quarter. So it's one of those things that you have to check quarter by quarter in order to make sure that you're eligible for the credit. But even if you don't think you're eligible, I think it's still worth looking into because it's something that you can go back and amend old returns and get a whole bunch of dollars back.
I do want to mention here that with the holiday rush, we are recording this a little bit earlier than we normally would prior to air. We're recording this on November 11th. So we're going to try to stay away from some of the real specifics because some of the legislation is changing, it seems, almost daily in Washington. So these are going to be more generic, more general pieces of advice to give you as we're doing so far. So just want to put that disclaimer out there.
Peter, I have a question. You said it was effective October 1st.
So the bill that was just passed in the House eliminates the employer retention credit going forward, beginning in the fourth quarter of 2021.
Oh, okay. So Peter, can you explain the differences amongst an accountant, a CPA, and a tax preparer?
Sure. That's a good question. So an accountant is kind of a general term, right, that we use for anybody that might help you with your finances, right? A CPA is somebody who has been certified by typically their resident state. In my case, I'm certified by the state of Michigan. I get a license number associated with the state. And in order to get that license, I have to pass some pretty stringent tests. I got to pass all 4 parts of an exam. I got to have 2,000 hours of experience underneath another CPA. Being a CPA allows me to do stuff that an accountant does, and it allows me to do stuff that a tax preparer does. So if I'm a CPA, I'm typically an accountant or a tax preparer, or both. If I'm an accountant, it doesn't necessarily mean I'm a CPA, if that makes some sense. Okay. A tax preparer is anybody who's licensed to practice in front of the Internal Revenue Service. Okay. So by being a CPA, I'm automatically allowed to do that. But there's other ways to do that. There's something called an enrolled agent. So tax preparers can go out, study for an exam, and become an enrolled agent in order to practice in front of the IRS. And one of the common misconceptions that people have is, oh, my tax preparer is a CPA, he must be better than an enrolled agent. And that's not necessarily true. There's plenty of enrolled agents out there that have plenty of experience and are probably better tax preparers than your buddy who's a CPA and might work in industry at GM, right? Just because you're a CPA does not make you an excellent tax preparer.
That's really helpful. So how does an individual or a business choose who to hire?
I like that question more than any other question I typically get, Andrea. I wish more of my prospective clients would ask that question. Here's how I'd answer it. I'd say you need somebody who you can have a good relationship with. There's a weird level of intimacy between an accountant, a tax preparer, and a client. I know just how charitable people are, right? You can't necessarily lie to me. So I think you need to find somebody that you're comfortable with and has the skills to do the job well, right? And you may not know that going into it, but you need to find somebody who's honest enough to tell you when they're not good at the job, right? We do a lot of work for businesses, but I'm terrible with restaurants. I can't help them be more profitable. I'm not great with convenience stores and gas stations. So if you're a restaurant or a gas station and you're looking for a new accountant, I'm not a good fit just because we don't have the requisite experience that you need in order to do a really good job for those types of people. So when you're making the decision, I'd say make sure that people's licenses are up to date. That's one real simple thing that you can double check on. It's really easy to get on the state of Michigan's website and double check license information just by looking up a last name. But find somebody that you're comfortable working with, because what you want is a good long-term relationship. It's not like a one-off, let me get my tax return done and run away. You want somebody that you can reach out to in the middle of September because you got a weird notice from the IRS, or in the middle of October because you're having a great year and you need to get ahead of whatever tax liability might be coming down the railroad line.
Peter, you mentioned businesses you're not as familiar with. What are some businesses that you do have a lot of familiarity with that you really enjoy working with?
We really like working with service providers. It seems to be a good niche for us. Attorneys' offices, medical practices, dentists. We do plenty of work with a lot of local contractors. Contractors seem to be like great clients because they're lousy at managing the books, but really appreciative of people who are good at it. Just like you don't want me working on your car or hanging drywall. They kind of know their area of expertise and stay in their lane.
I have a friend of a friend who was in the contract industry and had a shoebox of receipts. That's how he prepared his taxes, and then just dumped the shoebox off at his accountant's office and said, good luck.
It sounds pretty expensive. It's an expensive way to do it. We'll handle it, but it's not going to be cheap.
Hourly rate, right?
Right.
Peter, is there a time when an individual should make that transition from doing their own taxes with one of the online services versus using a professional like yourself? At what point does that decision come into play of, hey, this is beyond what I'm doing here, and I'm probably leaving some deductions and some money on the table. I need a professional. Where do you draw that line?
I like that question too. Hard to answer. I'm going to give you two answers, right? One is where the level of complexity of the tax return goes beyond your skills, right? If you buy a rental property or if you've got a side hustle with a little bit of business, you really ought to have an expert preparing that return. There's just too many ways to screw it up. I'm not saying TurboTax with the CPA support chat window can't do it for you, but I think you'd be better served by somebody you can have a relationship with. And that level of complexity is different for everybody, right? Somebody might go out and buy some GameStop stock when it was going through the roof, and that might be enough complexity to scare them off of preparing their return.
Stonks going to the moon.
Right. I don't have any clients like that, fortunately. So that's one option. The other option is if you find yourself spending way too much time and you go, my time is more valuable than spending 8 hours gathering documents and 4 hours fighting with the software, you can find a tax preparer that'll do it at a reasonable rate, and they'll handle very simple returns and will do a great job, and you can reclaim 12 to 15 hours of your life for a pretty low price. And for a lot of people, that's a good deal.
I would agree. And it's a peace of mind that it's being done correctly.
I try not to touch on that because I hate the idea of selling based on fear, right? But I would agree with that.
Don't worry. It's the IRS, not you, that they're afraid of.
That's true. That's true. But the IRS really is not as scary as people have made it out to be.
My wife calls it the time value of money to that point, Peter. I mean, when I just started my business in 2018 for part of the year, she works in corporate finance. She was able to do our taxes online, and it didn't take her very long. And then as the business picked up, she's like, ooh, there's a lot of deductions here. There's a lot of stuff I might be leaving on the table. This is getting a lot more complex. It's worth hiring a professional, one, for that time investment, and then two, to make sure that we weren't leaving anything on the table as far as deductions and stuff like that.
Yeah, I think that's a good strategy to have. And I'll add a third one. You've got somebody to call on later on in the year if you need somebody. That's like that old H&R Block ad. You can't call the box of software, right? If something happens in the middle of the year, you can't reach out to somebody. you're kind of stuck and you're trying to navigate that stuff on your own, which can be intimidating to say the least.
So, Peter, are there any COVID provisions applicable to our tax returns this year?
There's a couple COVID provisions. Yep. Number one, if you remember from 2020, Congress said even if you use the standard deduction, now you get to deduct $300 of charitable contributions. Okay. For your 2021 tax return, that amount is now $600. So not the most generous thing, but certainly keep it in mind if you're using the standard deduction. That's number one. Number two is the stimulus payments. So if you recall, Biden got into office and said, okay, everybody's getting $1,400 per person listed on your tax return. That money went out in March or April of 2021. You're going to need to reconcile that with your tax return on 2021, just like you did last year. So if you recall, in 2020, we had to say, hey, Andrea, you got $1,200 worth of stimulus payments during the year. Well, you actually qualified for $1,800, so we're going to give you a $600 credit on your 2020 return. It's the exact same process this year. You got to compare what you actually received with what you qualified for. If you received less than what you qualified for, you get it back. If you received more than what you actually qualified for, congratulations, you kind of win the IRS COVID and you get some free money. That's number two.
So you won't be penalized for it, Peter, what you're saying. You can get some back, but you'll be penalized if you got too much?
That's right.
Okay.
Number three is if you've got kids, the IRS tried to get you some money early on throughout the summer and into the fall. This was the advanced payment of the additional child tax credit. Now, this one is going to be a little bit more complex, so stay with me here. I'm going to try to do my best to explain this because I'm probably going to have this conversation about 500 times in the coming months.
Just have him listen to the podcast.
That's the solution, right?
Brilliant plug, Andrea. Great.
I think this works for everybody, right? Okay. The IRS tried to say, okay, we think 50% of your child tax credit can be sent to you ahead of time because we want to get you this money ahead of time and have you spend it and jumpstart the economy. Okay, well, that's all well and good as long as people understand how it works. So let's say you're like me, you've got 3 kids. Your child tax credit is normally $6,000, okay? And let's say on a normal year, you're really good at managing your tax liability and you typically get $1,000 refund every single year. So that's what we're normally planning on. Well, the IRS sent you half of your child tax credit in July through December. So you've already received $3,000 worth of that tax credit. When you go to prepare your tax return, you're going to say, okay, I'm going to pick some numbers that make my math work out. Your tax liabilities, $10,000. You've got a $6,000 tax credit and you had $5,000 withheld. But the IRS is going to say, hang on a second, we already sent you $3,000 of that, okay? So instead of a $1,000 refund, it's possible and probable that you're going to owe the IRS $2,000. And that was not extremely well communicated to taxpayers. And so I have a feeling I'm going to have a lot of surprise clients when they're used to getting refunds are actually going to owe a couple of dollars because they already received the child tax credit. Now, in addition to having that unpleasant conversation with them, we're also going to have to communicate exactly how much they received. The IRS is supposed to be sending out letters to everyone that received the advance payment sometime in January of 2022 so that they can include that in their reporting on their 2021 tax return. Now, if you're anything like any one of my clients, they might take that and go, I'm not used to this, I don't recognize it, and dump it in the trash. But it's going to be a lot of back and forth with clients this year, making sure that we understand how much they received ahead of time and reconciling it correctly with the IRS.
So if we do accidentally throw it away, is there a way that we can find the information online?
Yeah, and that's one of the things that the IRS has actually been done a really good job of lately. If you go to irs.gov/account, you can verify your identity, number one, with the IRS, but then you can review the stimulus payments you've received. You should have a detailed list of your advance payments of the child tax credit. You can look at your old tax returns if you're looking at something to put you to bed at night. You can make sure that you don't have a balance due. They've actually really expanded the online offerings on irs.gov, and it's been really helpful for us as preparers as well.
I need to go there and check out my account too, make sure everything's good to go and ready for tax season. Now, a question for you, kind of lighten this up a little bit. Are there any deductions that are available this year that are new?
So one of the things that is new for 2021 alone, so in years past, you could always deduct cost of business meals, right? But the IRS says, well, you have to eat anyway, so we're not going to give you the full deduction. We'll let you just take 50% of whatever you spend on that meal. Part of the Tax Cuts and Jobs Act a while ago, people were trying to get restaurants jump-started. So for 2021, if you purchase a business meal, it is deductible at 100% instead of 50%.
I am eating.
That's huge. I better go back through my my accounting for the year.
Yep. The rest of the year is going to be really fun.
Yeah.
I know. I think business lunches every day, business dinners.
Steak and lobster for everybody.
Isn't there like business breakfast too?
Why not?
Breakfast is a meal, yeah.
Hey, listen, as long as the IRS says it just needs to be tangential to some sort of business discussion. So, take your spouse out to lunch and pick their brain about social media stuff. That's my go-to.
You could pick their brain about buying rental or income properties and generating some income.
There you go. I like it.
Peter, I know that tax law is constantly changing. What do you anticipate some of the changes for this year?
That's a good question, Andrea, and I'm not sure if I can answer that specifically, but I can talk about what I expect to happen in the future. I look at the spending we did for COVID with business getting PPP money and economic injury disaster loans. I look at all of the spending in the infrastructure bill that's going through Congress right now, might be passed by the time of this recording. And I have to expect tax rates to go up. I think we've kind of gone through a period where tax rates have been historically low for a lot of people. And I can't say for sure, and I don't have a crystal ball, but I have to imagine that we're going to run into a couple of years here where tax rates are going to rise. And so that leads me to believe that maybe 2021, 2022 could be really, really great years to make some money. Traditionally, tax planning has always been, how do I reduce my tax burden as much as possible right now? I think you're seeing a shift with a lot of preparers, myself included, where we're trying to think about what's your tax burden going to be like for the next 5 or 10 years. And in a rising tax rate environment, we might say, hey, now's the time to pay some tax. If you've got a big chunk of money in a traditional IRA and that money has been tax deferred, well, the IRS is going to get that tax dollars one way or the other, now or later. And if you were looking at it and going, okay, well, taxes are kind of on sale right now, maybe now's the time to take some of that money out and pay some taxes on it, because it's going to be a lower rate than it will be 5 or 10 years from now. Now, I can't say that for sure, but it is kind of what I expect to happen.
Not to go too far on a tangent here, Peter, but a lot of the financial advisors that I do podcasts with have talked about Roth IRA conversions. Kind of what you're saying there is converting that money and paying the taxes now, like you said, while they're on sale, as opposed to later on if the tax brackets go up.
Yeah, I love Roth IRAs if you're eligible for them. I think they're a fantastic vehicle, especially if you have a few years between now and when you're actually going to need that money. The Roth IRA, you don't get the tax break now, which is never pleasant, but the investment income, the earnings, the appreciation you realize in that account between now and when you take the money out is never going to be taxed. Not only that, you don't have to take the money out if you don't want to. with a traditional IRA, once you turn 72, the IRS says, hey, we'd want our tax dollars now. You got to start pulling that money out. With a Roth IRA, it's already been taxed, so you can hang on to that for as long as you like.
Peter, you mentioned you had a lot of other interests before you got into business as a CPA and working with your dad at Boyse CPA. I'm curious what hobbies you have outside of dollars and cents and taxes and all this kind of stuff.
Oh, man, how much time you got left? Because I can talk about bicycles for about an hour and a half. Luckily, this is a podcast because you can't see my black eye. I do a lot of bicycle racing. Went over the bars this past Saturday at Iceman Cometh Challenge up north. But I do a lot of bike racing when I can. And my 3 kids keep me super busy. And if I'm not hanging out with them, we're trying to travel as much as possible. We spent a whole month out in southwest Utah this past summer, just working remotely and hanging out outdoors.
Sounds like fun.
It was.
Yeah, that sounds like a great time. Well, I'm curious because I know with tax season, it is like the most stressful time, I think, for everybody. What do you do? Because you're getting inundated with all of these emotions and stress. What do you do during that time period to kind of unwind besides riding a bike?
Yeah. It's hard to find time. So I think, honestly, part of what I have been successful at is making sure I eat well, right? And that means not grabbing Burger King for lunch 5 days a week. So part of what has helped me get through tax season during busy seasons is doing a little bit of meal planning, making sure I'm getting like real vegetables and healthy food in my body, trying to fuel my body as best I can. And then in the evenings, it's typically crashing on the couch next to my wife and probably falling asleep before the kids do when I'm that busy.
Understandable. And taking care of yourself is so important, especially when we all get busy with work. And sometimes it's so tempting to just run out and grab that fast food. So that's really huge. I'm glad to hear you say that. All right, Peter, it is now time for our fishbowl question of the day, where we pull a totally random question for you. Lisa, can you please pull our fishbowl question of the day?
All right, here I'm going to dig deep into the fishbowl. All right, Peter, who is your celebrity crush?
Oh, that's a good question. Celebrity crush. I have always had a crush on Alicia Keys.
Very cool.
Talented woman, very honest.
Beautiful voice.
Beautiful voice. Yeah. Just seems kind of open and honest and just overall real pretty.
Doesn't hurt.
Yeah.
Thank you so much for joining us today, Peter. Can you tell the audience how we can get a hold of you?
Yeah, probably easiest way to get a hold of me is at our website, Boyse CPA. Boyse is a little bit tricky. It's spelled Boyse CPA.com.
Perfect. Do you have a phone number?
Yeah, phone number is 248-652-9900.
Okay, perfect. Well, my name is Lisa Bibby, and I am a realtor with Keller Williams Advantage. I put the real back in realtor. Are you looking to buy or sell your home, purchase an investment property, or even start an Airbnb? You can find me on Facebook, YouTube, and Instagram at Sold by Lisa B.
My name is Andrea Arndt. I am an intellectual property attorney at Dickinson Wright, and I help my clients protect their inventions and build their brands. You can find me on LinkedIn and on our firm's website, www.dickinsonwright.com.
I am John Gay from Jag in Detroit Podcasts. If you are thinking about a podcast as part of your 2022 marketing strategy, I'm your guy. You can find me at jagindetroit.com or on social media at jagindetroit. Also, for the 4th member of our team, Trish Caruth, she is a 3rd-generation jeweler and owner of Your Personal Jeweler, specializing in creating custom engagement wedding rings and fine jewelry. You can find her on Instagram and Facebook at The Personal Jeweler or on her website, www.thepersonaljeweler.com. Peter, thanks again for being here. For everyone listening, the Rocc Pod is a production of the Royal Oak, Michigan Chamber of Commerce. You can find out more about the Chamber at royaloakchamber.com. And for Chamber members, if you want to be a guest on this show, just send us an email, therocpod, that's TheRoccPod @gmail.com. Thanks, everyone.